Let's get more context now from Alex Tapscott. He is Managing Director of Ninepoint Digital Asset Group. Alex, nice to see you. Thanks for joining us.
Yeah, my pleasure.
It's obviously been a very chaotic few days, and certainly those comments in this presentation that was put together hastily for potential investors speaks to how quickly things have changed. What's your reaction to that tone from Sam Bankman-Fried?
Well, the collapse of FTX represents a staggering fall from grace from one of the most well-known figures in the space, and also obviously a huge setback for the industry as a whole. As early as a week ago, FTX was fine in the eyes of investors and users. The information about the organization had not yet been made public, and the problems that have caused it to collapse had not yet arisen. Now we're looking at a situation where there's at least a $6 billion shortfall in the company's finances, maybe as much as 10. A figure as high as 50 has been reported. And I think that FTX is scrambling to look for some form of a bailout to get itself out of this situation.
The thing that we uncovered with looking at these documents, those same numbers that you point to of needing all of this money overnight and opening the door to have those conversations, is people were looking at this documentation and trying to make sense of, an Excel spreadsheet, which seemed to have been created by the founder in real time with even some notes of apology. So, I mean, you're someone who looks at investment opportunities all the time. What's an investor supposed to do if it's a situation of duress? That's what they're looking at, and the asking price is billions of dollars.
Yeah, well, it's going to be very difficult for any investor to make a calm and rational decision in light of all of these different moving parts. As early as Tuesday, so Tuesday of this week, Binance, the company that in some ways sort of set off this problem for FTX, had offered to buy the company out. We don't know for how much. The guess is probably close to zero in terms of the value of the equity. Probably Binance was going to help to bail out existing users to make them whole and maybe take care of some creditors. But even they backed away within a day of looking at these books. So I'm not totally sure what 2 more days of compiling this data is going to do to change the investment picture for a company that's clearly in a lot of trouble.
And for investors who have a right to be skeptical right now, even the Binance example, people aren't always sure, are they looking to help or are they looking to hurt? These two companies have always, to a certain degree, been frenemies, it feels like.
Yeah, that's certainly true. And I think actually this whole saga reveals a much bigger problem with this industry, which is that companies like Binance and FTX are exchanges that allow you to buy this asset class. And in many ways, they're supposed to represent an on-ramp into the asset class and into the technology, better known as Web3. And the problem is they've gone from trying to be an on-ramp to basically being the industry itself. And they become these too-big-to-fail organizations, which is really unfortunate because anybody who knows anything about blockchain or digital assets knows that they don't require a trusted intermediary. These are peer-to-peer technologies. They're assets that can be moved between individuals without a middleman. So it's a real shame, to me at least, that we seem to have swapped one set of middlemen in the old economy for a new set of middlemen. And it's my hope, at least, that despite the fact that this is clearly a big setback for the industry and for the asset class, that people will emerge from this with a renewed focus on what really makes the technology special, which is that we don't need to rely on billionaires and middlemen and other trusted third parties to actually make the industry work.
And I think the frustration for the average investor, having felt, whether it was FOMO or the feeling that you're just not thinking about the future if you're not investing here. Yeah. There was all this hype last year. And the other thing you learn from a situation like this is it's not just whether you want to invest in crypto, it's how and where, which platforms. Can you speak a little bit more to that? Because it seems like the way the FTX business was set up worldwide, they were opening the door for people to be investing in various pockets of the world. But if you're a Canadian that is investing your money through a platform, presumably it's a lot better to be using a homegrown platform or at least a place where there's actually a regulatory dialogue taking place about investing within Canada?
Well, this is an industry that's moving really quickly, and so you've got to cut regulators some slack. They're trying to, figure out just like what exactly to do with companies in this business with a new and novel asset class. But at the same time, I think inaction in a lot of parts of the world have actually pushed a lot of users offshore into riskier platforms. Like in the United States, for example, FTX had to open a subsidiary business which didn't offer the full suite of services. And in order to access the full suite, you had to go offshore. And if you're offshore, it means you're not subject to the same kinds of scrutiny and regulation that you might be as an onshore entity. So it's very likely that on the back of this, that regulators begin to crack down on centralized crypto asset exchanges for good reason. If if it looks like a bank and it walks like a bank and it acts like a bank, it's probably a bank. And so I hope that regulators do drill down and hold these companies to a greater sense of accountability. Having said that, the underlying technology and asset class is fundamentally different from companies that offer services on top of it. And that's a key distinction that I hope doesn't get lost in the mix as regulators rush to figure out ways to control the risk so that this kind of thing doesn't happen again.
Okay.